CoinTalk Podcast, fam. You ready for this? Buckle up, because today we're diving deep into this crypto crash everyone's talking about. It's making headlines as even worse than Terra Luna and FTX going down.
Yeah, this one's a doozy.
We're talking a $2.2 billion liquidation event, the biggest single-day crash ever.
Sure, you're right.
Absolutely wild. We've got this trcrypto.news piece breaking it all down, so let's get into it.
Yeah, let's unpack this. What's really interesting to me right off the bat is that this crash, unlike those implosions we saw with Luna and FTX, those were caused by problems within the crypto market itself, right?
Yeah.
But this time, it came from completely outside the crypto world.
Totally. It wasn't another exchange going belly up or a stablecoin losing its peg.
Yeah.
This crash was triggered by, get this, Trump announcing new tariffs on Canada, Mexico, and China.
Talk about a shock to the system no matter what you're trading.
It really highlights how interconnected global markets are, and crypto, even though it's supposed to be this decentralized thing, isn't immune to those ripples.
Not at all. And the CoinGlass data really paints a stark picture of just how powerful that ripple effect was.
Yeah, they're reporting $1.87 billion in long positions liquidated. So for anyone watching on CoinTalk Podcast who might be newer to crypto, that basically means people who were betting on prices going UP got absolutely crushed.
Absolutely crushed. And it wasn't just a small group of unlucky traders either. This was widespread. Even those betting against the market, the shorts, they took a hit too.
Ouch.
Yeah. They saw about $345 million liquidated.
So add it all up, that's a total of $2.15 billion in liquidations.
Yeah.
That officially exceeds what we saw during the Luna or FTX crashes.
Yeah, this is uncharted territory, even for crypto.
Uncharted is right. And looking at which coins got hit hardest, it's clear this wasn't just a Bitcoin issue.
Nope.
Bitcoin did see $400 million evaporate, but Ethereum actually took the brunt of it.
Yeah.
$600 million in liquidations.
Wow.
That's massive. Now, I know Ethereum has this huge ecosystem of projects built on it, tends to attract more, speculative trading. Could that explain why it got hit harder than Bitcoin?
It's very possible. It's likely a few things, really. Ethereum's DeFi space, with all those complex lending and borrowing protocols, that's particularly sensitive to market volatility.
Makes sense.
Plus, Ethereum just tends to attract more development and experimentation by its very nature, which can lead to higher volatility, compared to Bitcoin, which is more established.
Right. And don't forget about the altcoins.
Oh, yeah, them too.
trcrypto.news points out they were down anywhere from 15% to 30%, almost across the board. So if you were hoping to escape the carnage by diversifying into smaller coins, no luck. This was a true market-wide meltdown.
For sure. And to really grasp just how bad this crash was, let's look at those liquidation numbers in context, the actual price plunges.
Yeah, okay.
So Ethereum went from over $3,100 down to $2,500 in just 24 hours.
Ouch.
That's a 20% drop, which is, for a top-tier cryptocurrency, enormous.
And while Bitcoin's generally considered the more stable of the two, it still took a hit. It dipped below $92,000 before recovering slightly to around $93,600. A 6.5% loss for Bitcoin in a single day, that's a lot.
It is. It highlights the fact that even the so-called blue chip cryptocurrencies are not immune to these sudden swings.
Right.
And one factor that undoubtedly amplified this crash, something our CoinTalk podcast viewers should really pay attention to, is leverage.
Yeah, leverage. trcrypto.news spends a lot of time on this, and for good reason. Essentially, it's borrowing money to make bigger bets.
Exactly. When the market's going your way, leverage can be amazing. It supercharges your gains. But when things turn sour,
oh man,
it magnifies your losses just as dramatically. And in a market-wide panic like this, where prices are plummeting, leveraged positions get liquidated automatically to prevent further losses. And that just fuels the downward spiral even more.
Okay, I'm going to try to explain this simply for anyone watching on CoinTalk Podcast who's new to leverage. Imagine you have $100, but you use leverage to borrow another $900, giving you $1,000 to trade with. Now, if the market moves 10% in your favor, you make $100 profit, doubling your initial investment. But if the market moves 10% against you, you lose your entire $100 and your position gets liquidated.
Perfect example. And when you have a large chunk of the market using leverage, which was definitely the case leading up to this crash, it creates a cascade effect. Falling prices trigger those automatic liquidations, which push prices down further, triggering even more liquidations, and so on.
So it just spirals.
It's like a snowball rolling downhill, getting bigger and faster as it goes.
That's a scary visual. So basically, leverage, while it can be lucrative, it's also risky. It adds another layer of volatility to the crypto market. And as we saw, that volatility can unfold really, really fast.
That's right. And it's worth noting that this crash and the role leverage played in it wasn't a total surprise. The article quotes this crypto analyst, Crypto Michael, who actually called this the worst altcoin crash since COVID.
Wow, so even the experts saw it coming. What was Crypto Michael's advice to traders caught in this mess? He wasn't recommending doubling down on leverage to try and win it back, was he?
Not at all. His message was all about patience, resisting the urge to make emotional decisions, especially when you've just suffered a big loss. He warned against revenge trading, which is basically trying to win back your losses immediately by jumping right back in, often with even more leverage.
Yeah, that's such a trap that so many traders fall into, especially after a big loss. It's like that emotional need to make it back right away. But as we've seen, that can often lead to even bigger losses. So if you're watching this on CoinTalk Podcast and feeling that urge to revenge trade, take a deep breath, step back, and remember, sometimes the best trade is no trade at all.
Very true. This crash is a reminder that the crypto market is volatile, unpredictable, and reacting emotionally rarely ends well.
Absolutely.
Welcome back to CoinTalk Podcast. Before the break, we were really dissecting this massive crypto crash. You know, the biggest single-day liquidation event ever. Can you believe that?
I know, right? It's mind-blowing. We talked about how those tariffs from Trump were the trigger, how a crazy $2.2 billion got wiped out, and of course, leverage. Leverage basically poured gasoline on the fire.
Yeah, it was a wild ride for sure.
So as promised, let's shift gears a bit and look at what all this means going forward. I think the big question that's on everyone's mind, everyone watching CoinTalk Podcast, is this just a bump in the road for crypto? Or is this the beginning of crypto winter, like some people are already saying?
Yeah, that's the million-dollar question, isn't it? And honestly, there's no easy answer. Crypto is famous for its volatility. Predicting its future is, I don't know, it's like trying to predict the weather 3 months out. But what we can do is analyze the situation, look at historical patterns, and at least consider the possibilities.
Okay, so let's try to put this crash into perspective. We know it was the biggest single-day liquidation event, even bigger than Luna and FTX. But how does it compare to other major crashes in crypto history? Have we been here before?
Right. We need some context. If we look back at the 2018 crypto winter, for instance, we saw Bitcoin drop over 80% from its all-time high.
Ouch.
Yeah, and that was a prolonged bear market too. Lasted well over a year. This recent crash, it's bad, but it's nowhere near that magnitude. At least not yet.
So you're saying it's too early to call it a full-blown crypto winter? Things are different now than they were back then?
Exactly. One major difference is the level of institutional adoption and just mainstream awareness of crypto in general. Back in 2018, crypto was still this niche thing, right? Dominated by retail investors and, let's face it, a lot of speculators. Today, you've got major institutions, hedge funds, even governments getting involved.
That's true. And so even though we saw this huge sell-off, there's a chance that those institutional investors, with their deep pockets, might see this as a buying opportunity.
It's definitely possible. If they believe in the long-term potential of crypto, which a lot of them clearly do, they might see this dip as a chance to buy more at a discount. They have a longer-term view than the average trader.
So for all of us watching CoinTalk Podcast, what are some things we should be keeping an eye on to see where the market goes from here? What are some indicators that might tell us if this is a long-term thing or if we're going to bounce back quickly?
Well, one thing to watch is sentiment. Just the overall mood, the news flow. Are we seeing panic and fear? Or is there some, resilience, maybe even optimism starting to creep back in?
Because sentiment can be really powerful in crypto, right? If everyone thinks the crypto winter is coming, that fear can kind of become a self-fulfilling prophecy.
Exactly. And beyond sentiment, keep an eye on regulatory developments. Any big announcements from governments could have a huge impact.
Speaking of regulation, there's been a lot of talk lately about more scrutiny, maybe even crackdowns on crypto, especially after that whole FTX mess. Do you think this crash might actually make those regulatory efforts happen even faster?
It's possible. I mean, governments were already pretty focused on crypto, and this crash, even though it wasn't caused by something within the crypto market, it could give them more ammunition. They might want to move faster to implement stricter rules.
Which could be good or bad, depending on how they do it.
Exactly. If it's done well, focus on protecting investors, but also allowing innovation to continue, it could actually benefit crypto in the long run. It could make things more stable, more trustworthy, attract more institutional money.
But if it's too restrictive, too heavy-handed,
Then it could stifle innovation, drive away investment, and hurt the growth of the industry. It's a tough balance. It'll be interesting to see how they approach it.
Yeah, for sure. And we'll be here on CoinTalk Podcast to analyze it all, help our viewers understand what it means for their investments.
Absolutely. We'll keep monitoring the market, looking at those key indicators, and providing you with the insights you need to navigate this whole crazy world of crypto.
Okay, CoinTalk Podcast crew, we've covered a lot in this deep dive. We broke down that brutal $2.2 billion crypto crash, explored what it might mean in the long term, and even touched on the whole regulation question.
It's been a lot to unpack. We saw how things completely outside crypto, like those tariffs from Trump, can really shake things up. And of course, we dug into leverage and how it can be both a blessing and a curse.
Definitely a double-edged sword.
Yeah.
And all throughout this deep dive, we've really emphasized how crucial it is to stay informed, avoid those knee-jerk emotional trading decisions, and just generally buckle up because crypto, well, it's going to crypto.
It's a wild ride. But before we wrap up this episode of CoinTalk Podcast, I want to leave our viewers with something to think about, a final thought-provoking question.
Ooh, I like it. A cliffhanger. Yeah. Lay it on us.
So remember, this crash was triggered by something outside the crypto market, right? Which I think brings up a really important point. Crypto doesn't exist in a vacuum. It's connected to everything. The global economy, politics, technology, everything.
That's so true. We can't just look at crypto in isolation.
Exactly. So here's the question for everyone watching on CoinTalk Podcast. What other external factors could impact crypto in the future? I'm talking political stuff, economic stuff, technological advancements, anything. What does this all mean for the stability of crypto? Is it a sign that it's still too vulnerable to things happening outside of its control? Or is it just, a reflection of how interconnected our world is these days?
Great questions. It really makes you realize how important it is to stay informed, not just about crypto, but about the world in general.
Exactly. By staying informed, having these discussions, and continuing to learn, we can build a stronger, more vibrant crypto ecosystem.
Well said. So CoinTalk Podcast listeners, we want to hear from you. What external factors are you most worried about? What opportunities do you see in all this chaos?
Yeah, let us know. Drop your thoughts in the comments below, and let's keep this conversation going.
Absolutely. And that's a wrap on another deep dive here on CoinTalk Podcast. Don't forget to hit that like button if you found this helpful, and subscribe to the channel for more in-depth analysis on all things crypto. Share it with your friends, spread the word. Until next time, stay curious, stay informed, and as always, stay ahead of the curve.